Hi, good evening, everyone. Jeremy here, quantstrategic.com.sg with a recap of last week's trading action and the close of the month of January as we start February 2021. And on the S&P 500 on the long-term charts, still a very nice uptrend, maintaining its uptrend since the 1st of December last year. However, you can take note, you can see that the candlestick has closed a little bit weaker for the month of January to start off the trading session and the year of 2020. So what we need to actually take note of is to see how February starts off and whether we have a weakened monthly trend. The first initial support on the long-term charts will be at 3302, and this will be a level to watch if there's some weakness that will set in the first quarter of 2021. Continuing on the weekly time frame, which is our medium-term outlook, the uptrend that was started in the 1st of June last year, 2020, going long at 3168, still on a bullish footing. However, we have hit our first target as posted in my blog on the website quantstrategic.com.sg. We have hit our first target at 3708. And this is important to take note of because if 3708 breaks, we'll be testing the Kijun line, which is this particular white line here, at 3539. So take note of this support. And finally, a more important pivot point would be at 3454, which is the super trend line that's supporting this entire movement up all the way from the long signal for the past 7 months. So take note of 3539 as well as 3454. So, continuing with our discussion, a new trend break has been witnessed on both short-term charts, and the first one being the daily S&P 500 chart. Pretty significant because the pivot point, which I wrote in the blog, 3726, has been broken quite convincingly, and we will start off next week with a downtrend, a new fresh signal that was issued. And this signal came about on Friday as we closed off the trading week last week. The short signals were 3726, which was the original pivot point on the super trend. And it's now targeting 3539. All right, so it's just below this portion, below the SSSB line on the cloud. All right, so we do not want price to end up in this area here, which will start a new downtrend on the S&P 500. So that will take quite a while for it to materialize. We have to see what happens in the month of February. What we want to see is price bouncing off at least the first support, which is the SSSA line on this particular cow, and continue to bounce up and test the pivot at 3863 and then break above for the bulls to continue its uptrend. Otherwise, if we go into this particular cloud area, we might see quite a bit of choppy action before an eventual break to the downside. And that will start a medium-term downtrend to test the pivot on the weekly charts. And looking for the 4-hourly chart, which is my reference time frame to take an earlier signal, you can see that there are multiple attempts for shorting since December of last year. 4 different occasions where people tried to break the S&P 500 downwards. They were all not successful. However, there was a short opportunity last week again on Wednesday on the 27th of January, where the short target broke 3820, and it managed to break down away from the SSSB cloud line and is now forming a cluster below the cloud formation. And this is extremely bullish. As you can see, for the rest of the short attempts, All right, you didn't see price action going below the cloud at all. So you can see the first attempt here to short, we maintained and it continued above the cloud. The second attempt as well, it maintained above the cloud. The third attempt, same thing, it maintained above the cloud. But for this particular occasion, you can see that the price action actually broken down below the cloud and formed a bearish cluster just below the cloud line. And the S&P 500 did hit a level at about 3,700 points, 3,708 as per my target earlier on. It did manage to rebound, tried to break above this pivot point line at 3,872. However, it was not successful. The bears managed to push the price action down towards the close as the market closed off into the morning on Friday and Saturday morning in Singapore time, and we have now closed at 3,705. Just 3 points away from my target at 3,708 as written in my blog. So moving forward, we would like to see whether this particular downtrend develops and maintains below the SSSB line on this particular cloud formation and heads downwards. All right, only a rebound above 3828 will invalidate this bearish move and invalidate this short signal. However, if that doesn't happen, then the short signal will be valid, and we will now have to refer to the daily's chart to see whether it does the same and trade below the cloud. So essentially for the month of February, just take note of the first important level on the weekly chart. All right, take note of this level 3539. All right, because 3539 will form the first support for this down move, a new short signal on the dailies, as well as this down move on the 4-hourly charts. After that, you'll have support at 3454, which is the second support for the S&P 500. I'll recap these levels on my blog and just refer to the website to get these levels written down for you as you're observing the S&P 500 for the next couple of weeks. All right, so what does this mean for investors and traders? For those of you who are actively trading the NASDAQ or the Dow component stocks, please have a little bit of attention on the levels, because once the S&P 500 weakens, it means also that the NASDAQ as well as the Dow will be weakened at the same time, because the S&P 500 is considered one of the guidance index for the world, and it affects European and Asian markets as well. So thanks a lot for watching, and click on the subscribe button if you have not, and the alert button for my next video, and see you guys later, and stay safe and happy trading.